The trade war between the United States and China has escalated dramatically. Both sides have imposed new tariffs on each other's goods. This latest round of tariffs has heightened tensions and fueled fears of a full-blown trade war. The impact is already being felt across the global economy. The U.S. has threatened to impose tariffs of up to 104% on Chinese goods. These tariffs target a wide range of products. Smartphones, computers, and toys are among the items affected. The U.S. argues that these tariffs are necessary to protect American jobs and businesses. It accuses China of unfair trade practices. These practices include intellectual property theft and forced technology transfer. China has responded forcefully to the U.S. tariffs. It has imposed retaliatory tariffs of 34% on U.S. goods. These tariffs affect key American exports like soybeans and automobiles. China has made it clear that it will not back down in the face of U.S. pressure. It has vowed to take all necessary measures to protect its interests. The escalating trade war has sent shockwaves through the global economy. Businesses are bracing for disruptions to supply chains. Investors are increasingly worried about the impact on global growth. The International Monetary Fund has warned that the trade war could have significant consequences for the world economy. China possesses a range of economic weapons to deploy in retaliation to U.S. tariffs. One strategy is currency devaluation. By allowing the yuan to weaken against the dollar, China can make its exports more competitive. This move could offset some of the impact of U.S. tariffs. Another tool at China's disposal is state intervention in the stock market. State-linked enterprises have been buying shares to prop up the market. This action is intended to calm investor nerves and prevent a market crash. China has a history of intervening in its financial markets to achieve its economic objectives. Beyond these immediate measures, China is pursuing a long-term strategy to reduce its dependence on the U.S. It is focusing on expanding domestic demand and promoting technological innovation. China aims to become more self-reliant and less vulnerable to external pressures. Experts believe that China is prepared to endure economic pain in the short term. It sees the trade war as an existential struggle with the U.S. China's leaders are determined to withstand U.S. pressure and emerge from the conflict as a stronger global power. The trade war's impact extends far beyond the U.S. and China. Southeast Asian economies are particularly vulnerable. Many Southeast Asian countries are integrated into global supply chains that rely on both the U.S. and China. Disruptions to these supply chains could have significant consequences for the region. Some experts believe that Southeast Asia could benefit from the trade war. As U.S. tariffs make Chinese goods more expensive, businesses may look for alternative suppliers. Southeast Asian countries could become attractive destinations for manufacturing and investment seeking to avoid U.S. tariffs. However, any benefits to Southeast Asia are likely to be outweighed by the negative consequences of the trade war. The overall slowdown in global trade will hurt Southeast Asian economies that rely heavily on exports. The uncertainty created by the trade war is also deterring investment and business expansion in the region. The trade war highlights the importance of Southeast Asian countries diversifying their economies. Reducing their reliance on a single market, such as China or the U.S., is crucial. By fostering regional integration and developing domestic markets, Southeast Asian nations can mitigate the risks posed by global trade tensions. The trade war between the U.S. and China is more than just a dispute over tariffs. It is a clash between two economic superpowers vying for global dominance. The outcome of this conflict will have profound implications for the global order. The U.S. sees China's rise as a threat to its economic and geopolitical hegemony. It aims to use tariffs and other measures to contain China's growth and maintain its position as the world's leading power. The U.S. is also concerned about China's technological advancements, particularly in areas like artificial intelligence and 5G. China, on the other hand, is determined to continue its economic ascent and assert itself as a major player on the world stage. It sees the U.S. actions as an attempt to stifle its development and maintain an unfair global order. China is willing to endure short-term pain to achieve its long-term objectives. The trade war is a dangerous game of chicken. Both sides have dug in their heels and seem unwilling to back down. The risk of miscalculation and escalation is high. The longer the trade war continues, the greater the damage to the global economy. Finding a way to de-escalate tensions and reach a negotiated settlement is essential to avoid a catastrophic outcome.